Good afternoon. This is Sean Golding with Golding & Golding. As we approach tax season, we get a lot of questions from taxpayers who live overseas. They're not really sure what the term expat means, why it applies to them. Are they still considered a U.S. person for tax purposes? Do they still have to file? Do they still have to report? So let's take a few minutes here and go through the basics of filing your tax return as a U.S. expat that lives overseas. So the first question is, who is an expat, right? And we'll go through the distinction between that and an expatriate in a moment, but an expat is typically a U.S. citizen who lives overseas, right? You're a U.S. person, you moved overseas for work or just to live, to explore, and you're living outside of the United States for a majority of the time, so you're considered an expat. Oftentimes, this will include something called accidental Americans, people who don't know they're U.S. citizens, because, maybe they were born to a U.S. citizen mom, but they didn't spend any time in the United States and they have no relationship to the United States. They're considered an expat. Lawful permanent residents, technically they're a citizen of another country, not the United States, but because lawful permanent residents are considered U.S. persons for tax purposes, conceptually from a tax perspective, when they live overseas, they can also be grouped together as a U.S. expat. It's important to distinguish between an expat and an expatriate. Expat is more temporary. Expatriate is not temporary, more permanent, right? So you decide you're going to live overseas. You live outside the United States for a few years. You're considered a U.S. person. You're an expat. But if you move overseas, and let's say you renounce your U.S. citizenship, you terminate your lawful permanent resident status, then technically, if you're a lawful permanent resident who's considered long-term, you have to do the same hoopla that a U.S. citizen has to do. So that's the process of formally giving up your U.S. status. That's not the same as just moving overseas. Just living overseas, even if your green card was to expire, that doesn't mean that you've given up your U.S. status. The taxation for expats is essentially the same as it is for citizens or permanent residents who live in the United States. You're taxed on your worldwide income. So even if you live in the United States or you live abroad and your income is sourced from overseas and you pay taxes overseas, you're still subject to U.S. tax on your worldwide income. Now, if you're living in a treaty country, typically if you're not a U.S. citizen, you may qualify for a treaty election to be treated as a foreign person for tax purposes. But baseline perspective is that you're taxed on your worldwide income. And all different flavors of income are taxable. Earned income from your work, passive income such as dividends, interest, capital gains, royalties, rental income from the United States, even though you live overseas. From overseas, it's all taxable, okay? Now, there may be an exception, exclusion, or limitation to a certain bucket of income, but again, baseline perspective, expats who live overseas are taxed the same way as if they live in the United States. If you live overseas, though, as an expat, you may qualify for the foreign earned income exclusion, where you can exclude up to $120,000 of your U.S. income. People filing married can each exclude that amount. There's also housing exclusion that may apply as well. So you may be able to exclude it, but you still have to file your return along with a Form 2555 to claim the exclusion. Just not filing it because you qualify for the exclusion isn't kosher. And it's important because these days, if you have a substantial tax debt, the IRS can facilitate you having your passport revoked or the renewal declined. In addition, if you live overseas, even if you live in the U.S., but we're focused on expats. So let's say you're an expat, you're overseas, and you paid foreign taxes on the income, you can apply those tax credits to the income tax you would have in the United States on that foreign income. So even though you're an expat and you're being taxed on your worldwide income, there are tools that you can use and maneuvers you can make where at the end of the day, you may not have any tax liability. But it's important to note that just because you're an expat and earning your income from foreign sources doesn't mean you're not taxed on it in the United States by the IRS. International reporting for expats. So here's where it gets a little more complicated. Technically, as a U.S. person, you still have to report your worldwide assets on the various international information reporting forms. One of the most common ones you'll find everywhere is the FBAR. There was a recent case called Aroeste, I hope I'm pronouncing that correctly, but in that case, the court had said because the taxpayer qualified to be treated as a foreign person for tax purposes under the treaty, that means they didn't have to file the FBAR. IRS does not take this position. FinCEN does not take this position. In fact, if you look at publication 5569, which is for the FBAR, the updated one, I think February of 2023, they have examples. And one of the examples they give is Joe or Jane lives overseas and they qualify for a treaty election. So do they still have to file the FBAR? The IRS takes a position that they do. That case will make its way through the court system and appeals and all that kind of stuff. Some of the other common forms taxpayers have to file when they're expats are the same ones they'd have to file if they're living in the United States. FATCA Form 8938, which accompanies the Form 1040. Now, if you make a treaty election to be treated as a non-U.S. person for tax purposes, and you file the 1040 NR instead of the 1040, assuming you qualify, then you may not need to do the Form 8938. Because the Form 8938 is only filed when the tax return 1040 is filed. Other tax returns as well, but not the 1040 NR, because the 1040 NR is for non-residents. There's also the 3520 for gifts and trusts, 3520A for trust, 5471 for foreign corporations, 8621 for PFICs. As an expat living overseas, you would still file these. Again, if you meet a treaty election, you may take the position that you don't have to file it. The IRS would probably disagree. And since the penalties can be so high, it's important to really look at the pros and cons of taking that approach. If you've been living outside of the United States as an expat, all of this is new to you, as it is to many people. Try to sidestep the fear-mongering and all the nonsense you will find online. You can get yourself into compliance. In fact, if you live overseas, even as a U.S. citizen or permanent resident, you may qualify for the streamlined foreign offshore procedures where there is no penalty. There are a lot of programs available. There's the voluntary disclosure program. That's for people these days who are willful and or can't certify under penalty of perjury that they're non-willful. There used to be another version of the program, OVDP, where even non-willful people might do it because some of the protections that you could receive from it, but that doesn't really apply anymore. So these days, VDP, whether domestic or offshore, is for people who are willful. Otherwise, if you're non-willful, there are a lot of other programs available to you. There's the streamlined procedures, the delinquency procedures, and reasonable cause. Each of them have their own pros and cons. You should discuss it with a board-certified tax law specialist before making any submission to the IRS. We have a ton of free information available on our main website and our sub-websites. You can always reach out and schedule a reduced fee initial consultation if it's appropriate to your matter, something that we handle here. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.